Today, let's leave the geopolitics aside for a moment. Let's go back to the global financial plumbing and what's going on there. So, first, last week, Basent announced and went to Japan, but that's all he said. And so, I don't know, I was assuming that because of the trade negotiations breaking down, that he was going to go over there and negotiate the trade. But that wasn't the case at all. The BOJ announced that they have taken steps to facilitate the use of US dollars as a collateral for funds supplying operations, including those against pool collateral. Okay, so what does that mean? Well, remember something. The BOJ can print what? They can print yen. They can't print dollars. So that means Basent went there and negotiated with Yurida on doing a dollar yen swap with the Bank of Japan. Now, we don't know what happened there. So, to give you an example, normally, we charge 50 basis points to a foreign government when they want to do a swap with us with their currency. During the great financial crisis, when Europe was, flat on their back, their banks needed dollars. They didn't need the euro because everything is paid in dollars. And so we cut a deal with the Europeans. We gave them $600 billion at 25 bips. So they could give it to the banks so the banks could pay off their debts in dollars, okay? Because the Europe can only print euros. So when you go through this, what they're doing here, what it now says is that the Japan Securities Clearing Corporation now accepts US dollars cash as eligible collateral in the interest rate swap clearing service. So think about this. You're Japan, you have the BOJ, and you have the yen, that's your currency, but now you're going to accept dollars in your own interest rate swap. So you can stop and read this, but tells you what the eligibility is. And basically, when you go through this, with bonds, with equities, it doesn't matter, okay? And it looks like they're giving them a high release rate. You can see here in the first paragraph, 99% of the 4-day price movements on bonds, and look at equities at 70%. That's high. Trust me, that's high, okay? And but they say to mitigate any risk to undue concentration, they've imposed limits on the amount of certain collateralized assets. I would imagine the stocks more than anything, okay? So what does this mean and why are they doing it? Remember something about the yen carry trade. It has multiple legs. You buy the JGB, the Japanese bond, and then you borrow against it. You don't short it, you borrow against it, okay? So you own it. Then you take that money and you go buy US securities. And the Japanese, I think they own like $3.4 trillion of foreign securities through the yen carry trade, with the vast bulk of this, as we know, with the US, okay? So, what can go wrong, right? So you're a corporation, asset manager, doesn't matter. You have dollars, euro, whatever you have, whatever your currency is. You go to Japan, you buy the yen. And then when you buy the yen, you go buy the JGBs. Then you borrow the money because you still own the JGBs. This is the critical part. You borrow the money out of the JGBs, and given that it's JGBs, probably get 99%, if not higher, 99.2 or 3. And then you take that money and you go overseas and you invest in higher yielding securities. So remember, we just did that 3 in a row on Japan. Their rates are 25 basis points for the short from the Fed. They're 150, I think, on the 10-year and 310 on the 30-year. So you can come to the U.S. and buy the 10-year for 440. That's what they do. It's called the carry, is the difference, okay? So, what's been going on? Well, we know, we just did a bunch of videos that the yen 30 years has been going up, and so is the 10-year. So now you're that asset manager. You're the banks in Japan. You own lots of JGBs that you have borrowed against and gone overseas. And by borrowing against them, now they're going down in price. And you've already borrowed against them. So guess what? You need dollars to take care of this issue. And the Japanese, the BOJ, they can't print dollars. They have to get the dollars. So why would we agree to do this? Well, let's go through the process. If you have to come in and cover in a bank in Japan, what would you do? You would sell your foreign security, bring them back, buy the yen, and then cover your short of the JGBs, okay? And so, guess what? We're not sure we want that to happen. If this happened, if they came back and bought the JGB strong, okay, because of the trillions of dollars, we could end up where we were, whatever it was, 7-8 months ago when we had the yen carry trade almost broke, okay? We stopped it, but it almost broke. And so now, what do we do? Okay, so this is from Endgame Macro on X. Again, I don't know the guy, but I do read him. And here's what he says. On July 15th, when Bessent was there, they would begin supplying US dollar funds against pool collateral starting on July 17th. What was that? Thursday, okay? This move, while appearing to be routine liquidity management, has sparked discussions about the potential implications for the global financial system. The analyst points out that Japanese institutions have long benefited from the U.S. carry trades, borrowing cheaply in yen to invest in higher yielding U.S. assets. However, the current environment, characterized by high Fed fund rates and slumping yen, is making these trades increasingly costly and risky. The cost and risk of rolling over these trades escalate. Japanese firms are facing mounting pressure. The BOJ's decision to supply domestic US dollar liquidity is seen as a preemptive measure. So look, we've talked about this before in the last 3 videos that we did on Japan. The one thing I'd like to point out to all you crypto bros out there, if the central banks, including the Fed and BOJ, coordinate or expand liquidity through measures like swap lines or renewed quantitative easing, risk assets like crypto can rebound sharply. Endgame Macro states that quiet moves like the BOJ's recent actions are often the first signs of deeper systemic changes. So the yen's going down, the JGBs are going down, right? And the banks, they have to keep their capital up. And this is what we're talking about. So they have all their money over in the US dollar. So if they want to take care of this issue, they would have to sell their securities, i.e. our treasuries, to bring the money home. And Bessent's like, I don't want that to happen. 2 things here. He doesn't want that to happen. He'd like to see the yen go up, all right? But if we really, really started to see the liquidation of the yen carry trade, the yen would more than go up. It would skyrocket, right? And we saw that last year when we had the big issues with the yen carry trade. And so that's what we're faced with right now. So no matter how we cut the pie, there seems to be a liquidity problem in the world about US dollars, all right? And this is us, heading this off. So the last time I saw this happen was during the Great Financial Crisis. And by the way, we opened up swap lines for Japan last year when we had the problem with the yen carry trade breaking down, so to take care of it, but it wasn't formalized. We kind of jumped in and fixed the problem. This is a formal offering. So what do you think? Tell me in the comments and like and follow.